Hello everyone and welcome back to Globe Inside the Markets. I'm your host Sunlight and today I'm joined by Ning Zhang, co-founder of Bastion Trading. So please watch on to find out about how Bastion navigated multiple black swan events, his thoughts on where the macroeconomic environment will take us, and also trading tips. So enjoy. So welcome to the show, Ning. How are you?
Hi, great. Very happy to be on the show.
Thanks for being here. So let's jump right into things. Could you tell us a bit about yourself and your journey into crypto trading?
Sure. I started trading in 2006 when I graduated from university. Then I was in TradFi for a couple of years, like actually 7 years. Then I started up my own company, like a hedge funds market maker with a couple of my friends. Start with a small capital, but was doing okay. Previously was doing more like equity derivative trading. Um, then around 2017, we basically find some opportunities in crypto. By that time, it was actually more just a side pocket interest because like liquidity was okay-ish, or was quite difficult to wire money into different exchanges. There's a lot of like cross-country, like you can call it the arbitrage opportunities, but it's like operationally quite tedious, and the volume was not that big. So we were just doing it for the fun of it. I mean, to be honest, most of the platform that time looks very fishy. Like you just don't know if you can put like reasonably serious money. So we were, I think, like in the last wave, to start with, so 2017. Then you had the 17, the quite boom market. At a certain point, I think the BTC went to like 20K. Then all the way, like it just dropped to 3,000 within a year. Then was quite boring, 2018, 19, then 20, like, there was another boom market. This time started with the DeFi, FTX, all these things. Um, and then like it's just things getting interesting. I think crypto is getting more accepted as an asset class by a lot of asset managers or like investors than before, but I think it is still a long way to go, be regarded as something more serious. um well, we see, like, from our perspective, definitely volume changes quite a bit since 2017, and uh, I wouldn't say it's a bad journey.
Awesome. Yeah. So you've been in TradFi and for some years beforehand. Could you tell us the biggest lessons you learned in TradFi and how did you kind of apply it to crypto?
So I was in a big bank for a couple of years. Then I was like basically doing my own prop and hedge funds for a couple of years. And then like partially like step into crypto, and then now it's more like full-time crypto. But even though we still have quite a bit of TradFi trading activities, um, I think what's interesting about TradFi, or maybe you learn from TradFi, is basically a lot of the basics, like risk management, like, I mean, the way how you structure trades, how you look at trade, um, and the basic skill about trading. And then I think also along the way you pick up some of these business sense, right? So it's more not only about trading, but it's about like basically running a business, including trading itself, but also like including like a back office, middle office, compliance, control, um, and then all these parts sounds very cliche when you like can talk about it from the outside. It's like very boring stuff, but um, it actually, like at a certain point, like along the way, especially into a new industry like crypto, it helps you a lot because some of these things might be sounds very far away, but like in reality, it actually gets used or applied quite frequently. One of the jokes I always make is like back in the days when we were in the banks, like, all those AML training, compliance training, we were like, we just go there, like, tick the box and then, right? But now, like, you know what I mean? There's so many of these, like, regulation, these, like, AML, these KYC, like, requirements, like, not only in crypto, but also, like, a lot of things in the news, that actually those things, even the basics, get applied quite often, even as just a user rather than an institution. So I would say, like, a lot of things, like, you learned from the TradFi, at a certain point you just apply it.
Amazing, thank you. So we've actually had Bastion Trading on the show before. So it
Yes.
was about a year ago since having Massa on the show. And within that year, so much has happened. So for example, a lot of the big players like Genesis, for example, they've either blown up or actually left the crypto sphere altogether. So, but I mean, Bastion is still here. So could you tell us about Bastion's success throughout these, Black Swan events, let's say?
Yeah, sure. I mean, I wouldn't say, like, a lot of people are, like, basically completely gone. Like, there's still somewhere, like, maybe restructuring or things like that. For us, we're a bit different. We definitely dodged like 99.9% of the bullets through our way in the last couple of years. Um, I would say, obviously, there's a luck in it. I wouldn't say, like, it's 100% skill, because, like, no one would be, like, so skilled on every single event. Um, but also, like, we are quite vigilant on the risks, especially because we started trading crypto since 2017. We actually quite aware of the credit risk, and then the difficulty into, like, assess the credit risk of the exchanges, the counterparties, the, how do I say, the amateurish, or, like, immature of this industry, or, like, the legal structure, and, well, just a lot of things happen so quickly. So it bound to, like, basically something will break, right? It's more like, we knew something would break, but we don't know which parts. But it's kind of like getting into a very fast and not too comfortable space, right? Because, like, everyone is speeding at 200 miles per hour, but, like, I don't think everyone had a very nice car, right? So something bound to happen. But obviously now we, like, look back, we hindsight traded, we would say, okay, there's a Luna UST thing, the FTX thing, then I feel like, basically block prices, all these things. But, like, back in the time, like, all these are, like, star projects, or things like that. So, but it's not our first rodeo, right? Like, 2017, 2018, we see similar things. Maybe it's a little bit different in terms of names. A lot of names get forgotten up to 2018 as well, but it's similar style. You know what I mean? There are, like, projects that is really popular when the 100x. There were, like, star projects, star, like, KOLs. Like, leading voice into that thing, and then people get washed out in the 2019, 2020, and then obviously the next round comes. So that actually, those experience also helped us, because, like, we went through a lot of these, like, for example, like, some exchanges, the CEO, the owner, suddenly went missing. So, like, basically they stopped withdraw for a while. Then, like, basically we learned the lesson from that. So then we, like, basically diversify our portfolio, like, do more due diligence into that, or, like, basically structure our trades around that way. Like, things like that helps us for the next hedges. I wouldn't say it's perfect. That, as I said, there are a lot of luck involved, but we definitely, like, view risk differently in a lot of things. Of course, our background in TradFi also helps, because, like, in TradFi, I think the legal framework, the trading, like, basically structure is way more rigid. Takes some more time, but at least like, you have a more structured way of dealing with those things. Where like in crypto, I think in the heydays, like everyone just have a more like a trust me bro approach without like thinking too much about that. And if you ask the questions, like people think you are kind of crazy. So obviously it's a give and take, right? We definitely missed a few trains in that, but I would say like we also like basically didn't get hit by a few bullets, I would say, or maybe cannons.
Yeah, amazing. So it is very lucky that you guys managed to kind of dodge some bullets. But so you've been talking about how, your experience in TradFi has helped also with you guys, succeeding in this time. But do you think that there'll ever be a time that crypto price action will be decoupled from traditional like equities, sorry, markets?
I mean, I actually think up until like maybe end of 2022, it has been always kind of decoupled. Like, basically crypto volatility is like you're talking about like 200-ish, where like, an equity volatility in a very volatile equity market will be like 30, right? So it's a different magnitude, different kind of trading. The way you look at the risk is completely different. The clientele is different, or maybe not even call it clientele. Basically, the investor base is quite different, right? In the general equity world, uh, people trade very big size, but like it's very institutionalized. Even with the very retail mindset of the Asia markets, it's still like how would I say a couple percent return and things like that. Generally, people are quite good, right? Like if you're in the high double digits, like I think everybody's amazing, right? But in the crypto world, like up until this year, maybe this year it come down a lot. Like people's expectation goes back to more normal. Like a couple of years ago, like you talk to people, like if they're only 5 times, like they're not really like into it, right? They want like 500 times. Um, so obviously, like you look at things differently, you look at the risk differently. I would say like most people looking at the crypto tokens just more like a core option itself than actually looking at it as a pure like investment, right? So that's why um, it has their like basically different style of trading or things like that. So I wouldn't say like a couple. It's never like really correlated, but definitely you would say in the recent months, maybe a year, like BTC and Ethereum with the volatility come down, more behaving like a TradFi assets, like especially like kind of like semi-commodity. But I mean, even that, you may look at the BTC, right? I mean, at the beginning of the year until now, it may be like 100% up. Where like, if in any equity market, 100% up is a huge number, right? But in BTC, you don't even feel like that. It's like, okay, like 2 months of some bull market or some information flows, things go up like, 100%. So they still have like, high volatility and high beta, I would say compared to the TradFi market. So need a couple of years maybe with the real serious money comes in and it was more like a product trade, and then like more matured investor or big money allowed, then they will maybe behave differently. So
Yeah, it's interesting you say we'll see what happens with crypto when bigger players get into the industry, right? So we've got, for example, places like Hong Kong, being more crypto friendly now, let's say. What are your thoughts on that?
well, I mean, I think everyone is crypto friendly, I would say. I think crypto friendly is just basically some like catch phrase for people to like basically, especially like okay, apart from a certain country in North which is quite crypto unfriendly, I would say like there's no like
Yeah.
there's no like particularly a country like like really like strictly banning it. It just basically they have a different regulatory framework, different AML procedure, or things like that, which actually like it's a fair point. Like you wouldn't say you're allowing people to trade without any of these basically due diligence or KYC or AML. But on the other hand, the crypto inherently itself is kind of a byproduct of the financial crisis, right? So in BTC, because Satoshi created back in 2009, I think, just because of this financial crisis. So itself inherited a lot of these desire for freedom, which basically in itself basically is kind of not friendly to all these KYC, AML, tedious procedures. I wouldn't say it's necessary, just basically it's like that, right? So that's why we have to find a balance of things like that. As a user, obviously just a user, I mean it's okay, but then as an institution, I can see it's difficult for regulators, even more difficult. So that's why if some countries maybe have a bit of difficulty when try to regulate it, they move a little bit left, a bit of right, that's very normal. In terms of Hong Kong, I think yes, it's trying to be crypto friendly, but I mean it Singapore was crypto friendly before, US was friendlier, so things comes and goes, right? I mean I think we just need a very clear regulatory regime or framework, then everybody can just basically apply it to your trading or what you do need to do, right? It's too early to tell, I would say, but I mean it's always good if there's a more certainty, I'm not in a position or even try to predict where it's going or what they're going to do, but I think any clarity will be good.
Yeah, absolutely. I agree. So, we talked a bit about regulation. Do you think there's anything else in the kind of macroeconomic environment that will affect the crypto market?
Well, I mean, crypto markets, I mean, it's exists for a couple of years, more seriously, right? In the recent years, you wouldn't say there's not much data to talk about, is it macroeconomics really applying anything to crypto market? Because it can be different, the market cap of the whole crypto market, maybe 10 times than 5 years ago, or 3 years ago, whatever it is. So you cannot look back 3 years ago. So this will happen. So the next bull market is going to be like that. So basically the magnitude is different. The environment can be different, right? So but yes, I think overall, obviously, a bit of macroeconomics definitely slowly will kick into crypto world, and because the excess money supply in the world, or basically people just want to diversify to alternative classes, a certain point back in the days that basically people think it's an alternative to gold as an inflation hedge. Now looking at it differently, but some of these characters still applies. So there will be a bit of the macroeconomics into it, but then as just I said earlier, right? I think crypto is a very volatile market. A lot of people looking at it as a not 5 times investment, it's a 500 times investment. So it itself it behave like an option rather than basically a commodity or things like that. So by that, a lot of people just throw the money for fun, right? For their side bet, instead of really putting a serious money into it. I guess will be more going in, but so when that stage happens, it will be completely different, because at this moment I think there's only a few underlyings in crypto, namely BTC, Ethereum. People might looking at as more an asset to invest, but then all the other things are more just basically trading for fun, right? So the behavior can be completely off when there's a transition or regime change of these things. Crypto also had its own macro, right? like a lot of people have been talking about like the BTC halving next year, like basically what's going on with all these Ethereum upgrade or things like that. So historically speaking, a lot of these things like always play out more volatile than people expect. Like back in the days, like even people fork BTC to BCH BTC. I mean, like the expected like event is way like realized way more than people expected. So I would say there will be some events next year. So that's maybe you can consider as a crypto macro as well. Like, but how much the magnitude of that, like it really depends on the market condition and then how many players in this ring, right? Because the last few halving of BTC, they actually like you see the market is quite volatile or like quite bull market, but that's when like the market cap is so small, right? I mean, now like the market cap goes up and then the halving the effect is actually like going down. So there's a balance of that. So but again, people looking at it like I wouldn't say like crypto is without like any effect from the macroeconomics. So then just basically quite different.
Yeah, awesome. So, I mean, you've been in crypto since 2017, you said. So, and you mentioned the halving. So, are there any market tells that show you what part of the cycle that we're currently in?
I always like him. I used to joke with Masa, right? When Masa sells, normally it's the bottom of the bear market. But okay, joke aside, I think like partially it's true because like if everybody kind of give up and then basically like turn bearish, normally like that's the bottom of the bear market, and then if everyone think like BTC is going to 1 million, then maybe that's not the best time. But it's always super difficult to pick the bottom or pick the top, and normally like basically you get shaking off the car when you try to pick those points because like the volatility is quite extreme down there, and whether you're right or wrong on the bet, like you will be quite difficult for you to hold the position, right? Uh, Having said that, again, like there are some like basically macro events that basically I just mentioned. There are a lot of people talking about it, right? But these things are like, how do I say, like basically it's a self-fulfilling, right? Basically when everybody talks about it, maybe it happens, but then because everybody talks about it, everybody try to run with it, then you know what I mean? Like it might be like running ahead of itself. So it's quite difficult to really like see what extent these things are going to be, and then it's never easy to pick the absolute like bottom. So I would say like it's easier to just basically see where the flow is, and then play where like basically it's already bottomed up and then starting to go. Then maybe there's a trend you can capture. Then try to fight the flow or fight the information to just basically pick the absolute bottom or pick the absolute top, because like there's no real point of that. I mean, volume now is quite low, so so I guess it wouldn't be like in the middle of a bull market, I would say. But yes, like that's normally like how the market plays out, right? But I'm not kind of those kind of people like will be like, okay, this month it will go down like 20%, then it will go 50%, then it will go another 30. Like I don't have plans like that, like because I think like it's quite difficult to plan for 4 months already, like to plan like 3-4 stages. It's just completely not, or it's not my forte. So um I would say like yeah, watch where the flow is, and then I think that's more a good indicator. Obviously a lot of these like external forces helps, like basically like what's going on with those like ETF applying, well, what's going on with those SEC, CFTC lawsuit, all these players, right? Those news obviously have a bit of impact, and those information flows might come and then indicate where the market is going to be, right? It can be better or bull market, like it depends on how you're looking into it.
Okay, awesome. Thank you. So you said, planning months in advance is not your forte. So could you tell us what is your forte?
So I would say, I mean, I come from a equity derivatives background, right? So I'm more like looking like options, and then or maybe like options futures like those things. I don't really play the market like a one directional like bet. So I mean that maybe like tells like I'm still like since 2007 to now like I'm still not retired, right? Because but you know what I mean. Like if you just buy like enough at $1,000 on the BTC, I guess you can retire, right? So yeah. But jokes aside, I think like we're looking like things on. I'm not really like play directional that strongly, but like looking at other characters in the market, like volatility, like relative value, and try to find trading opportunities on that. And again, like try to predict where it is into every month or things like that. Not only like you need to look at the information flow, but I guess a lot of people love to play it because they are in the mining business or they're in like this project business, right? So they have different information flow, right? Like if you're a mining business, then you kind of like really discuss like how your cash flow is, how these like basically they have their own like regulatory regimes in the mining business as well. So like see like it's friendly to them. What's like the output or capacity or things like that. For us, more like a trader, like trading BTC can be different from trading like say oil, but it's not like 100 miles different, right? So it's just basically a different underlying and then assets we look at more holistically.
Yeah, amazing. Thank you. So, I mean, you said there's more. Well, what I understood is that there's maybe more risk, but also more money involved in, what you can take back from a directional view. Is that true or no?
That's just a different style.
Mm.
Like it's just a different style and different risk appetite, right? For us maybe taking a directional bets because like the volatility of the directional bets, like our size can be different from like when you do a relative value trade or you do like volatility trade or things like that. So there's a lot of ways to express your view or to try to like trade. There's like a risk return in it. There's capital size into it. There's like basically your comfort level or things like that into it. So I mean the good thing about come from TradFi is we traded all these things before, so we can just basically find the products that we like, right? We don't really necessarily need to like just only trade one dimension. We can trade different dimensions, or and then we can also in that way like source different kind of trading style or like basically or maybe liquidity as well. So that makes like everybody is like more, how do I say, suitable for their risk appetite. I guess that's the thing, like very similar to where TradFi is, like but we are not in the punting of something to the moon style. I mean, it's a good thing or bad thing. I wouldn't say it's absolutely a great thing in crypto. Like again, like we missed not only a few trains, maybe a lot of trains, right? But of course, we also didn't fell into the whole like FTX does. So there's a give and take. Like there's no right answer. So just how it is our trading style or like the comfort level we have.
Amazing. Thank you. So, do you have any advice for traders to prepare for the next coming few months?
That's always difficult. That's always difficult. I would say like, basically, um, uh, my honest thinking is like, basically, every cycle is different, and then completely, um, like will get you like, some kind of like off guard, like, no matter what, right? So I think like, before you know, you're in the bull market already, or before you know, you're in the bear market already. So these kind of things. So I would say like, basically, um, get as much information as possible, and then basically always like, basically expect something unexpected. Like I guess that's, I mean, that's kind of cliche as well, but like, maybe in the crypto markets, or more like that than than the TradFi market, because crypto market can, it just basically snap a finger, like, things can change quite dramatically, right? Basically you go from extreme bear market, then all of a sudden, like, you have you have a like, a relief rally from like, what, 18 to 27 without a break. Then you like, then you have this SEC lawsuit suddenly, like, everybody think, okay, you're going back to 15. you know
Mhm.
so I wouldn't say like, like it's easy to trade, but it definitely is quite interesting, and then trade the volatility and then be prepared.
Amazing. Thank you so much for your advice. Thank you so much for watching, and thank you so much, Ning, for your time. If you enjoyed this content, don't forget to like, comment, and subscribe. I'll see you next time. Bye.
Bye bye.